Hello and welcome to the first carrier update of the morning. I'm here with Zach Strickland, who seems to be in a chipper mood. This is brought to you by Powerfleet. Zach, what do you got for us?
Well, yeah, it's meteorological spring, as Kaylee Nix will attest to. The start of spring, even though the actual equinox hasn't happened yet. So.
This
Kaylee,
is the information I wasn't expecting in the carrier update, Zach. I love it.
I expected Kaylee to call that out, actually. So anyway, the freight market is looking like it's getting ready to get into spring mode here with some flatbed tender rejection rates really taking off here. Close to an all-time high, over 40%. We're really right next to it, 39.93%. Something we would typically see before the pandemic was flatbed activity increasing, not to this extent by any means, but we'd start to see it increasing in March. Typically those spring freight volumes start to make an active push, either sometimes late February, but sometimes into early mid-March, we start to see an increase in activity. The van side tender rejection rates still kind of middling right now. They took a little bit of an increase yesterday. Again, day-to-day volatility, nothing out of trend here. Really flat if you look over the last month or so. Tender rejection rates not making a big strong move downward on the van side. Now reefer, you've heard us talk about the overall aggregated tender rejection index. The reefer rejection rates are really what's driving a lot of that downward pressure on the overall OTRI, if you're looking at that, because look at this huge drop here, 36 down to 29% over the last 2 weeks. And reefer rejections have been relatively sticky, around that 36 to 40% range over the last 6-7 months. Not a lot of change there, as the van side was actually the one doing a lot of the contraction. So right now we've got a real mixed bag of activity, Anthony, depending on your mode, and this is highly unusual for any time of existence. Even during the pandemic, we've had a little bit of some divergence and disconnection between the modes, but this is truly them moving all in 3 different directions at this point in time. And it's very unusual, especially for this time of year. Now, the reefer rejection rate, I do not anticipate to stay down here. We've got produce seasons starting to ramp up here in just a few weeks. More than likely, they could be kicking off in certain parts now already, but not quite yet in most parts of the United States. So this looks like a false negative at the moment here, because this is probably going to change dramatically in the coming weeks.
Yeah, Zach, and you know what gets my heart happy, and of course it is this green line here, this flatbed. It's just really been on a tear over the last really almost a year. It's just that slow and steady raise, but now it's almost like you said, all-time highs. Incredible to see that this refrigerated outbound tender rejection is kind of coming down now this time of the year. Yeah,
it's coming down quickly too.
Yeah.
That's the crazy part, is that it's not like this little slow crawl like we've seen with the van side. The van's really, and of course, the density here isn't quite as strong as the van side. That's why the van is a little bit more stable on the volatility. So about 70% of the overall tenders come out of the van sector. Flatbed's really that 5 to 10% area fluctuating. Reefer makes up the rest of it. So it's still a very, when you're talking about these indexes, you have to understand that the density behind them also drives a lot of this volatility. Flatbed, obviously, the lowest volume in here. That's why you see these huge movements. But the overriding trend is what you take away from it. And the fact that these two crossed over, a pretty significant change in the overall market. Let's look at the next chart here. Now this one, a little bit complex, but don't get scared. 2 of these lines are rates, one of them contract and the other one spot. And then you have your van tender rejection index here. Now notice the van tender rejection index looks a lot more volatile on this chart. That's because it's got room to move, room to breathe here on the scale side. But looking at our 2 spot rate and contract rates, you can see they're actually moving in 2 different directions. They are actually coming together here at the very end, but even though the contracts are still increasing at this point in time. So our van contract index here did take another step higher, though slightly, here in February. And it looks like there's still plenty of upward pressure on these rates. You talk about these rate negotiation processes, they're a lot longer these are a lot shorter when you're talking about spot. These are negotiated days in advance. These are negotiated for months before they change in general. Now, that's changed a little bit over the last 16 months or so with people going to these monthly negotiation cycles and things like that. But I think still the majority are trying to get some long-term consistency out of their rates. It's just when they're ineffective for a few months, they come back in and say, okay, what else do you need here? So the inflation is still happening on the contract side. Tender rejection rates, though, coming down overall, so that should make it a little bit easier to keep this down. But as long as they're above 10 to 15%, you can expect there to be upward pressure on this index.
Some impressive stuff happening now, Zach. Of course, the unexpected always happening right now in the freight market. Thank you so much for this update. We'll check in with you again. Right now, we're going to toss it back over to Kaylee Nix.